Hey, welcome back. Today, we're going to cut right through all the noise you see on financial charts. Seriously, we're going to look at how one single, simple line can show you the hidden story of the market, helping you spot trends that, honestly, most people just miss. Let's get right into it.
So have you ever just stared at a price chart and your brain just kind of melts? All those jagged peaks, those sudden drops, it can look like total random chaos. It's a really common feeling. But what if I told you there was a simple way to see the real pattern that's hiding in all that madness?
Okay, first things first, we've got to understand what we're actually looking at. We're going to decode that chaos and figure out what all that noise really is.
So here's the problem, right? Those daily or even hourly price swings, that's what we call noise. It's the market's knee-jerk reactions, it's the algorithms trading back and forth, it's just the daily chatter. And trying to make a big decision based on that stuff alone, it's like trying to hear a whisper at a rock concert. It's just not going to happen.
And this leads us to the big question. What if you could put on a pair of noise-canceling headphones for the market? What would you hear then? Well, you'd finally hear the melody, the real underlying trend, the actual direction the asset is trying to go. And that is exactly what the tool we're talking about today is designed to do.
All right, so it's time to introduce the hero of this story. This is the tool that filters out all that junk and brings some beautiful clarity to the chart.
Let me introduce you to the moving average, or just MA for short. You know, at its core, it's an incredibly simple idea. It just takes the average price of something over a set period of time, let's say 20 days, and then it plots that average as one single smooth line on your chart. This is how we turn all that market chaos into real clarity.
Now you got to remember, a moving average has one primary job. It's not here to predict the next price tick or what's going to happen in the next hour. Nope. Its only goal is to filter out all that short-term craziness and show you the bigger picture, the underlying trend. Is the market generally heading up, down, or just sideways? The MA helps you answer that with just a glance. But you know, not all moving averages are created equal. Let's break down the two most popular types you're going to see out there. So, on one side, you've got the simple moving average, the SMA. It's the chill one. It treats every single price point over its time period as equally important. This makes it a very smooth, but also slower line. And then on the other side, you've got the exponential moving average, the EMA. The EMA is a bit more impatient. It gives more weight, more importance to the most recent prices, and that means it reacts way faster to price changes, which for some traders can be a massive advantage.
Okay, so we know what they are, but how do traders actually use them to make decisions? Well, that brings us to one of the most classic trading signals in all of technical analysis.
You see, the real magic happens when you put two moving averages on a chart, a fast one and a slow one. For instance, a lot of traders will watch a 20-period EMA and a 50-period SMA. When those two lines cross each other, that is a moment that traders really pay attention to. It's called a crossover, and it can be a super powerful signal that momentum is about to shift.
So here's a classic example for you. When that faster, more reactive moving average crosses above the slower long-term one, it's often seen as a really bullish signal. It's basically suggesting that the recent momentum is picking up steam and a potential uptrend might be starting. Think of it like a speedboat zipping right past a big, slow cruise liner. Something's changing.
And here's the cool part. Once you really get the hang of the moving average, it opens up this whole new world of analysis. It's literally the building block for so many other powerful indicators. Tools you've probably heard of, like MACD, Bollinger Bands, moving average ribbons. They all use this simple line at their core. They just build on it to give you even deeper insights into the market.
But hang on, before you run off and start slapping moving averages on every single chart you can find, there is one absolutely critical piece of wisdom we need to cover. So let's talk about the most important rule for using this tool the right way.
All right, now this is the most important thing to remember, so listen up. Moving averages are what we call lagging indicators. What does that mean? Well, because they use past data to get their number, they will always be a step behind the current price. They don't predict a trend, they confirm a trend that's already started. And that's why a smart trader never ever uses a moving average all by itself. They always combine it with other tools to get the full picture. And that brings us to the end. The moving average is an incredible tool for understanding the story that the market has already told us. So the real question for you is, now that you can see that story, that trend, a little more clearly, how are you going to use that insight to make smarter decisions about what might happen next